Are you guilty of these bad money habits? Welcome to Tenacity Talk. Let's delve in. We all have our little financial vices, but some habits can put a significant dent in our wallets and sabotage our financial well-being. We're talking about impulsive buying, keeping up with the Joneses, living beyond your means, and 12 other money habits that can keep you from achieving your financial goals. Recognizing and breaking these habits is crucial to taking control of your finances. Stick around to find out if you're a culprit of these habits and how to break free. Ever bought something on a whim and regretted it later? It's a tale as old as time. The thrill of the purchase, the high of the new, only to be replaced by the sinking feeling of buyer's remorse. That's impulsive buying for you. It's a habit that can put a serious dent in your financial health. But fear not, solutions are at hand. Setting a budget or imposing a waiting period before making purchases can keep those impulsive tendencies at bay. Remember, patience is a virtue, especially when shopping. Ever find yourself trying to keep up with the Joneses? Let's face it, we've all been there. But it's a slippery slope when you start mirroring the spending habits of others, especially when their financial situation may not mirror yours. Instead, focus on your own financial goals and avoid the comparison game. Remember, it's not about having what others have, but what makes sense for you and your budget. Your wallet will thank you for not trying to keep up with Kardashians. Does your lifestyle match your income, or is it a case of champagne taste on a beer budget? Living beyond your means is like running a race with a backpack full of rocks. It's exhausting and only gets you deeper into debt. The antidote? Facing the music. Start by tracking your expenses, becoming best friends with a budget, and learning to say no to non-essentials. A little frugality never hurt anyone. Remember, it's not about how much you earn, but how much you save. Are you only making minimum payments on your credit card bills? It's an easy trap to fall into, but it's like trying to empty a bathtub with a spoon. You see, the minimum payment barely covers the interest, leaving the principal amount largely untouched. It's like a hamster wheel of debt. The solution? Allocate more funds to pay off your debts faster. Pay more than the minimum, even if it's just a little extra. Say goodbye to long-term debt by ditching the minimum payment habit. When was the last time you asked for a raise? Now, don't get me wrong, it's not about being greedy. It's about knowing your worth and not falling into the passive earner trap. Regularly reviewing your salary and assessing your market value is crucial. If you're doing a stellar job, don't be shy to negotiate for what you're worth. After all, you can't expect your boss to read your mind, right? Remember, if you don't ask, the answer is always no. Are you avoiding investments like the plague? Well, you might be unknowingly stunting your financial growth. By steering clear of investments, you're missing out on the potential for your money to earn more money. But fear not. Start small, learn the ropes. Dip your toe into the investment pool with things like low-cost index funds or bonds. Explore, educate yourself, and then dive in. Remember, it's your money, and it deserves to grow. Don't let fear of the unknown keep you from growing your wealth. Are you spending more as you earn more? If the answer is yes, then you might be ignoring lifestyle inflation. This sneaky habit creeps up on us, tempting us to splurge on luxuries as our paycheck grows. But beware, the more you earn, the more you might feel entitled to spend, which can lead to financial turmoil. A smarter approach? Save any increases in income. Treat them like unexpected windfalls and squirrel them away. Remember, more income doesn't always mean more spending. Are you hoarding cash instead of putting it to work? If you're stashing your hard-earned money under the mattress, or in a low-interest bank account, you're missing out on potential growth. Money is a tool, and like any tool, if it's not used, it gathers dust. Instead, consider investing in stocks, bonds, or real estate, or depositing it into high-interest savings accounts. Remember, the magic of compound interest can't work if your money isn't in the game. Let your money work for you, don't just let it sit around. Ever lent money without expecting it back? We all have, haven't we? But here's the thing, folks. This habit can lead you down a slippery slope. It's crucial to set clear repayment expectations when you lend money. And guess what? Formalizing loans isn't a bad idea either. It helps to safeguard your interests and maintain relationships. So next time your friend, cousin, or neighbor asks for a loan, remember, it's not being mean, it's being smart. When it comes to money, it's okay to expect it back. Are you avoiding paying your taxes? Well, let's spill some tea. Tax evasion can lead to severe legal and financial consequences. And believe me, orange is not the new black for everyone. It's not all gloom and doom though. You can tackle this by setting aside a portion of your income for taxes. If things get too complicated, don't hesitate to seek professional help. Tax experts can be your best friends in times of fiscal crisis. Remember, taxes are inevitable. Better to plan for them than avoid them. Ever invested in something you didn't understand? It's like diving into an ocean without knowing how to swim. Sure, the water may seem inviting, but the danger lies beneath the surface where you can't see. Investing in things not understood is a risky venture that can lead to financial loss. The remedy? Do your homework. Understand the ins and outs of your investment. Remember, nobody cares about your money more than you do. Knowledge is power, especially when it comes to investing. Are you relying on a single income stream? If so, you're walking a financial tightrope. Imagine losing your job or facing an unexpected expense. Scary, isn't it? The solution? Diversify your income. Start a side hustle, invest in stocks or real estate, or even consider freelance work. There's a whole world of opportunities out there. So step out of your comfort zone and explore. After all, as the saying goes, don't put all your eggs in one basket. Remember, multiple streams of income are better than one. Ever thought budgeting is not for you? Well, think again. Ignoring your budget is like going on a road trip without a map. You might enjoy the ride, but you'll likely get lost. Budgeting is the compass that guides your financial journey. It helps you track your income, control your spending, and save for future goals. So, ditch the budgeting is boring mindset. Embrace the power of a well-planned budget. Remember, budgeting is not a constraint, it's a tool for financial freedom. Ever tried to get rich quick through gambling or risky investments? We've all been tempted, but these approaches are often more perilous than profitable. The thrill of a quick win can blind us to the high stakes. Rather than betting your hard-earned money on a roll of the dice, consider investing in proven long-term strategies. Diversify your portfolio, contribute regularly to your retirement fund, and stay patient. After all, Rome wasn't built in a day, and neither is wealth. Remember, slow and steady wins the financial race. So, were you guilty of any of these bad money habits? From impulsive buying to ignoring budgeting, and even engaging in get-rich-quick schemes, we've covered quite a few financial faux pas today. Acknowledging these habits is the first step, but breaking them is the key to financial success. It's not about comparing your financial journey to others, but about making informed decisions that lead you to your personal financial goals. Remember, breaking these habits is the first step towards a financially secure future. Start today and reap the benefits tomorrow.